so I came up with this concept of what I call the monetary cycle of history.
There's a strong indication that they are going to adopt Ripple's technology for their payment rails.
The bankers will never allow and support policies that promote being outside the system.
Good morning, everyone. Welcome back to the Black Swan Capitalist YouTube channel. I'm your host, Aljarrah, with my dear brother, Vandell. Today, we're happy to host our esteemed guest, John Butler, the author of The Golden Revolution, How to Prepare for the Global Gold Standard. John has over 26 years experience in senior positions at top investment banks, including Lehman Brothers. John, thank you so much for being with us today.
Oh, my pleasure. Thanks for inviting me.
Well, John, once again, an absolute pleasure to have you here. I'd like to start with your book, The Golden Revolution, How to Prepare for the Coming Global Gold Standard. It really caught my attention because it's something I strongly believe in. And it's clear that there is a lot of corruption in our monetary system. And considering your background at Lehman Brothers and everything you must have endured during the 2008 financial crisis, and now we see central banks stocking up on gold, driving higher prices. At the same time, they're getting into blockchain technology. And it kind of feels like we are actually heading towards a gold standard. What you talk about in your book is a level playing field where no country can actually manipulate currencies. And I've combined what you talk and cover about in your book alongside with the research my brother and I do into the institutions like the IMF, the Bank of International Settlements, Money Flower. And it seems like they are building a two-tier monetary system. So I also want to know what inspired you to write your book and what it means for the future of gold and the monetary reset, which is underway already.
With rising inflation, bank failures, and massive layoffs across multiple sectors, the future of the economy remains uncertain. It's no wonder the central banks have been getting prepared by stockpiling gold. At ITM Trading, we have spent over 27 years building a team of seasoned researchers and analysts who can help you prepare for any financial crisis. Our experts are ready to provide you with proven strategies to safeguard your wealth and assets in the event of an economic downturn or currency reset, which is frankly inevitable. Don't wait until it's too late. Schedule your free gold and silver strategy call by clicking on the link in the description below.
Well, thank you for the kind introduction. I mean, yes, I do have a lot of experience in international finance, and it was in I would say the early 2000s that I began to suspect that there was something fundamentally wrong. It seemed that the attitude at the U.S. Federal Reserve, and for that matter, at the Treasury Department and at the highest level, the White House, there was this attitude that somehow, to paraphrase Madeleine Albright, former Secretary of State, that not only was the U.S. the indispensable nation, but it had become sort of the indispensable monetary power. It could sort of do whatever it wanted to regulate its own economy as it would, without really regard to the consequence that might have longer term for the international monetary system. And we've come a long way since then. Of course, we had the global financial crisis of 2008, 2009. We've had this extraordinary period of thereafter of essentially zero or negative interest rates, quantitative easing. That's all been reversed now. And now you've got this stagflationary situation, which many people, including myself, compare to the 1970s. So throughout this period, I've kind of gone on a journey, and eventually, as a result of the global financial crisis, I had an idea. I had an idea in my mind that if you combined the lessons of economic history with the core tenets of game theory and applied those to contemporary monetary developments, international monetary developments, they were leading us back to a gold standard. And so I came up with this concept of what I call the monetary cycle of history, from good money, bad money, and back to good money again. That's clearly what's going on. I'm absolutely convinced now that we are in this phase now of the monetary cycle of history, where this very, very unusual unipolar, unbacked dollar reserve currency that's being abused by the authorities is leading back to a global gold standard. We're going to get there.
Mm-hmm.
I
Spot
just
on.
want to make a quick comment on that. I believe you're absolutely correct, and our alignment of thinking is very similar to yours in terms of where we're going. Judy Shelton and Trump, I'm not taking sides here, but they're both huge advocates of the gold standard.
Mm-hmm.
Well, I mean, it is interesting to note that Trump is the first president since Reagan who has been willing to appoint someone to the Federal Reserve Board who is, if not necessarily a gold bug, is at least willing to countenance the prospect that a cure to our economic ailments, which seem to be proliferating of late, could be repaying the dollar to gold. So you've gone through a whole generation of appointees to the Federal Reserve who have disparaged gold uniformly, without exception. Trump was the first to put someone forward, Judy Shelton, who I know, by the way, who really thought the U.S. should reconsider pegging the currency again for a variety of reasons, and I'm sure you're familiar with the details.
Yeah.
But the fact is that I think one reason why Trump may also see things this way is because he's old enough to remember what the world was like when the United States was still on the gold standard. Mm-hmm. And his father, who is a very successful businessman, as we know, was also someone who thought deeply about business and the economy and lived his entire life, nearly, not entirely, under the gold standard, and saw the United States prosper firsthand. And he participated in that firsthand. So we have this link to the past in Trump's upbringing and length of life now. And Judy Shelton, of course, is not only an economist, but a student of economic history. So she's looked back at all of this also. And it's funny now, even if you go to mainstream organizations like the IMF and even the US Federal Reserve itself, they occasionally publish sort of an academic paper which explores comparisons, economic stability, monetary stability, financial stability, prosperity, productivity growth, etc., of the post-gold standard era to the pre-gold standard era under Bretton Woods. And guess what they sort of have to admit when they reach the conclusion? They have to admit that, in fact, overall economic performance was better, by far, depending on which paper you're reading, under the gold standard. But then the conclusion turns to how could we draw lessons from that wouldn't require going back to a gold standard. It's an interesting exercise.
Yeah. Well, John, there is a technology that we study. It's called Ripple. My brother and I are really into it. We've researched it thoroughly. And so far, what we've uncovered that it has been integrated into many central bank payment systems around the world, the technology. And according to some of the documents, like you said, the IMF, but also the Bank of International Settlements, the World Bank, there's a strong indication that they are going to adopt Ripple's technology for their payment rails. And when we dive even deeper into the discussion about the merging between precious metals and a basket of commodities and blockchain technology, it seems that they plan to leverage a digital asset called XRP to facilitate that value transfer of central bank reserves. It just plays the role of that level playing field of a bridge currency. And it's something you kind of allude to in your book, but it ties us into the central bank accumulation of gold reserves. And again, we know that there's a need for a digital counterpart, and that has been stated by the World Gold Council. So we believe, based on our research, that the digital asset that they're referring to is called XRP, hence, again, the positioning of central banks and financial institutions with the technology. It just makes a lot of sense. So I would like to know what your thoughts are on that.
Well, in the first edition of my book, I do not explicitly discuss this possibility. In the second edition of my book, The Golden Revolution Revisited, that was published in 2017, I do have a chapter which is titled Bitcoin, the monetary touchstone, in which I explore how some sort of crypto golden synthesis could be an interesting way to blend the advantages of blockchain technology with those of the traditional gold standard.
Mm-hmm.
And while I would be skeptical to think that central bankers as a group are acting in the general public's best interest, it would not surprise me that at least some minority of people in those positions would see that a possible way out of the rather unfortunate dilemma that they've created for themselves would be to try to get back to gold, but get back to gold in a way that still allowed them a degree of control.
Mm-hmm.
That is, rather than allowing everything to blow up, rather than allowing a complete and full decentralization of the global monetary order, which is sort of what Bitcoin maximizers advocate, that maybe there's a way, maybe there's a middle way where you can have a permissioned blockchain of sorts, where the central bank can observe and regulate, not hopefully, I mean, depending on which side you take in this matter, not in a way that would obscenely violate personal privacy and whatnot, but would allow them to kind of continue to play the economic and monetary regulatory role they have for decades, but would constrain them somewhat, such that they could actually begin to trust each other once again. Nobody trusts anyone right now. Look at Anthony Blinken's recent trip to China. Do you think that he said anything that the Chinese actually believe? Do you think the Chinese said anything that he actually believes? I almost wonder. I mean, that's how bad things have got. And these two are huge trading partners, not only to each other, but to the rest of the world, obviously. Now, that's how bad it is. So I can imagine, again, some people speculate there's outright panic out there. Maybe there is, maybe there isn't. At a minimum, I think what you're proposing here is plausible given the context. And where there's a bit of smoke, there's probably a bit of fire.
Very good point. Thank you very much for clarifying.
Yeah, definitely.
My pleasure. Again, look, history occasionally presents these situations where one is not only able to speculate, but almost has to, right? There is just no clear roadmap anymore where we're going. So, my hat off. I'll take my hat off to anyone who honestly and thoroughly does some research around the margins and tries to see just what might lie in our monetary, economic, and financial future.
Thank you.
Agreed. Yeah. And I just want to point out one thing, and this is just our opinion before we move on to the next question. Based on what my brother just said, we've been doing our due diligence and research and connecting the dots with the traditional financial system and the digital world that we're moving towards, the innovation and the blockchain technology for the monetary system. There's definitely going to be some sort of harmonious connection there, since that's the direction we're moving into. Everything's going to be digitized. Eventually, most of it will be on the blockchain, and what they're doing is merging it. So our theory is, and this is based on many years of research and deep digging and connecting the dots and kind of looking behind the veil, is that Bitcoin is the Trojan horse. It, interestingly, was created in 2009, right after the financial crisis around the world and in the US here. And Bitcoin is what they want people to focus on, but it's not going to be, it's a fool's gold, in other words, because the whole decentralized concept is, in our opinion, an illusion. The bankers will never allow and support policies that promote being outside the system. And Bitcoin was created as this libertarian movement, but in our opinion, that's what it's disguised as. And the real gems that they're going to utilize as financial instruments for instant settlement, liquidity, and bridge currencies, they're not highlighting those or putting any attention on those. They want you to look at Bitcoin, Ethereum, the things that are the assets or cryptocurrencies that are just paving the way, in other words, but they're not going to be used for the new financial system. That's our opinion. Just wanted to throw that out there. But yeah, do you think there's going to be more interest rate cuts this year? Do you see that happening?
I think it's possible. You have this sticky inflation problem now, not only in the United States but elsewhere, which gives the central banks less flexibility to cut rates. But as the past, I think, has clearly demonstrated, if you get a sudden unraveling of some aspect of the financial system, could be commercial real estate blowing up, could be a major bank getting into trouble. Uh, yeah, well, I mean, come on, this is a house of cards they've built up here, right? So who knows what card's going to be removed from the pile and when. So it could be just about anything that would then give them an excuse to cut interest rates, notwithstanding inflation being above target just about everywhere, and failing to decline further from the levels that it seems to have got kind of stuck at here. So it could happen, but it's a tough call, I guess I'd say at this point, right? You would need some sort of accident, I think, to lead to material rate cuts with inflation still as high as it is. But accidents happen. Certainly when you created built a house of cards, accidents happen. I think the higher quality forecast here, and this is one that I get a lot of criticism for, is that gold can only continue going up in this sort of environment. And the reason why is because if rates come down amid sticky inflation, that brings down real interest rates. That should move gold higher. But if the game keeps being played as it is, and the United States continues to abuse its exorbitant privilege, countries around the world will continue on trend to lose faith in the dollar as a long-term store of value. And if, God forbid, the Ukrainian war is not resolved at some point, and the U.S. continues to threaten sanctions on everyone, including fresh sanctions on China that Anthony Blinken also threatened last week, if you can believe that. Who wants to hold dollars? People will find an alternative. While someday there may be an established digital alternative, in the here and now, it's clearly gold that stands on top of everything. And indeed, I personally would argue that even in future, if there is going to be a digital alternative that central banks will accept as proper international store of value, not easily manipulated by one country at the expense of others, that digital currency is going to have to be gold backed in some way.
Yeah, very good point. When I hear a lot of the economists and advisors and all these finance guys discuss inflation and interest rates, we're stuck in a loop, not addressing the root cause behind it. Do you think enough pressure could eventually prompt the institutions to reset the gold price to alleviate the debt burden? Can you envision gold surpassing 80,000 an ounce? I know that sounds crazy.
I would say it only sounds crazy to those who don't actually look at the ratios. If you look at ratios of gold supply versus money supply, gold supply versus outstanding debt and leverage in the system, a medium to high five-figure price in dollar terms for gold actually kind of brings you back in line with historical averages. And those historical averages, right, reach back into a time when the US had a relatively low debt burden to GDP, had a much larger economic share of the global pie, vis-a-vis the rest of the world, of course, and had higher rates of full-time employment versus part-time employment, higher productivity growth, And it's not just the United States, but I mean, obviously that's the issue of the world's reserve currency. So the fact is, you could almost begin to make the case that a mid to high five-figure price of gold is conservative when
Right.
you make those qualitative adjustments. Now, again, I do get a lot of sort of ridicule for when I go ahead and stick my neck out to make points like that. But
Mhm.
the numbers are the numbers, and history does demonstrate that even powerful countries occasionally get into a pickle. And when they devalue, wow, they can really devalue and by a lot in a very short period of time. I mean, look at the history of the British Empire. They went through multiple rounds of surprising the market at midnight, on a Saturday, whatever it was. So don't rule it out. Yeah, it could happen, and it's the sort of thing that when it does happen, you're either in the trade or you're not, right? Because there's no way to get into a market that moves that quickly.
Yeah. Like you said, a crisis it would have to take for something like that to happen.
Do you foresee that in maybe, I'm not going to ask for exact time frames because it's so difficult to pinpoint. They just keep delaying things. But do you see that crisis occurring maybe from the banking system, maybe next year, this year, based on,
It could
market
certainly happen
cycles?
next year. It could even happen this year, although the U.S. is in a strange part of the electoral cycle right now, which gives the government excuses to do extraordinary things and promise extraordinary motivations to people who question its judgment, saying, "Oh, we just have to get through the election, then we can talk about that issue." So I think this year we're not going to see any real sea change, but next year you could. The thing is that I don't have I don't have a crystal ball, so I'm not going to be able to time this. All I will say is that when the rock pile collapses because one small pebble rolls out of the critical point, when the house of cards collapses because one of those cards finally slips and the pile comes down, no one's going to look back and say, "Oh, gee, we thought the system was perfectly stable and functional." Nobody thinks that anymore. And these things are kind of self-fulfilling prophecies in the sense that as you lose confidence, confidence is lost, unless specific actions are taken to rebuild that confidence. And so we're into something exponential now rather than linear. Every event that is just not reinforcing people's belief in the current system is actually eroding belief in that current system. And you kind of sense it. You kind of sense it. I mean, look at the stuff that policymakers talk about nowadays. You never would have heard them talk about any of that stuff 10 or 20 years ago. And it's practically in the headlines every day, notwithstanding the mainstream media's attempt to control the narrative. We've come a long way. And yes, things could happen anytime, but I don't think within the current US electoral cycle.
That makes sense. I know you're short on time. This has certainly been a very engaging conversation, and I'm confident our viewers are going to find this very enlightening. Before we wrap it up, though, is there any final thoughts you'd like to share with our audience on how they can protect themselves, what they should be, doing, I guess?
Well, look, I normally recommend, just based on the historical numbers, and these numbers go back over a century, that everyone should own gold as part of their liquid net wealth. Ideally, own it in physical form rather than through a banking or financial system intermediary. There are ways to do that. Just Google it and you'll find them. As for how much, I normally recommend 10 to 20%. People who are particularly concerned about the state of the world can even justify holding more than 20% of their liquid net worth in gold and gold-related investments. So that to me is just standard due diligence, good practice, as it were, for an investor. Beyond that, though, look, the world's not going to end just because we're going to go through a crisis and hopefully end up in a more stable environment backed by gold. Companies will still exist, right? Mines will still have to be dug. People will still need to produce all manner of things. And so the history does go in cycles. I referred to the monetary cycle of history earlier. We're going to get back to a better place. Stay invested in the future. Don't give up, and don't just pile into bank deposits because you somehow think that's safer than staying invested in real companies doing real activities that add real value to the real world, which of course is populated by real people like you and me. So, again, try not to be the deer in the headlights is what I say. Stay engaged, stay involved, stay invested, but sensibly is my advice.
I absolutely agree. 100%, John. And again, very, very invaluable information. We really appreciate it. Just phenomenal. We really thank you for coming on the show.
Hopefully we can do this again sometime. We'll see.
Sure. I look forward to it. Thank you very much.
Thank you, John. Have a blessed day. Take care.
You too. Bye-bye.